This is Agriculture Today, and I'm Shelby Varner with the K-State Radio Network. Dan O'Brien, K-State grain economist, and Guy Allen, the senior economist at the IGP Institute at K-State, start the show today as they provide a domestic and international look at the grain market. The pair give an overview of factors impacting the market, as well as conversing about corn, grain sorghum, soybeans, and wheat, and how numbers have changed for Kansas and foreign markets. Ending the show is K-State meteorologist Chip Redmond with a weather forecast. He discusses if we can be expecting any cooler or wetter conditions. That and more is coming up ahead on Agriculture Today. You're tuned in to Agriculture Today, and we start our Friday show with a grain market update with K-State grain economist Dan O'Brien and the senior economist at the IGP Institute at K-State, Guy Allen. Dan, Guy, thank you both so much for taking the time to join us today.
Thank you, Shelby.
Starting off our conversation on the grain market, first taking an overview of the current grain market factors.
Well, we had on October the 11th, a week ago Friday, the USDA October crop production and WASDE World Ag Supply Demand Estimates report. And numbers at hand now. We've the reports came back at that overall for U.S. corn that there's no diminishing signal yet on the size of the crop. Still, corn yields estimated 183.8, actually up a couple tenths of a bushel, and the size of the crop 15.2 billion. So you got that in hand. The soybean numbers just again, I think about 1/10 of a bushel lower. Soybean production 4.58, basically 4.6 billion. Both large numbers, and we'll talk about that a little bit more when we get into specifics. But the point is, large crops. Interesting prices in recent days have been pretty much sideways. You wonder about either at or heading towards a harvest bottom. If we're not there already, we had gotten pretty low lately. We'll watch what happens. But an abundance of grain around that's available in those markets. The wheat markets have a little bit of export movement. We'll talk about that also. But overall, no new hard numbers coming back into this market again until we get off into the November report, and I believe that's due out on November the 10th. So we have what we have right now, and with the market thrashing around, really domestic, not a lot happening domestically. If anything happens, Guy, it's probably going to be in the foreign world sphere on grain markets.
Yeah, there's a few things happening on that point, Dan. Start with the U.S. dollar has been on a bullish run since the 30th of September. We've had up days every day since then. It's rallied over 270 points as we approach 104 on the index there. And that's been weighing on commodity prices as it makes U.S. grains more expensive. That said, U.S. corn particularly, and to a lesser extent, soybeans are increasingly competitive in that global marketplace. The other issue I think is very important is a drop in the dry bulk index and international freight rates. We've seen that drop pretty hard in the last week or two. We're down about 1676 as of today's closes. Number of things happening there, a bit of waning demand, but also we're seeing a few missile attacks and rockets hit some grain ships there in the Ukrainian Black Sea ports, and that significantly raised insurance rates not only out of the Ukraine and Black Sea, but also we're seeing that across Mediterranean port insurance rates there as well. So a bit disruptive on that whole situation on that.
And if I can, and as you're talking about the transportation, a drought over there affecting both Russia and Ukraine,
yes.
Crops, the impact of that gets exacerbated with these transportation issues that you're bringing up.
Yeah, look, there's dry weather we're seeing in a number of places around the world, not only in the Ukraine, Europe, and Russia, but also in Brazil particularly, and that's making a lot of people worry. Just going back to the transportation sector, we had the hurricane come through, what's that, a 10-day, 2 weeks ago now. Put a bit of water in the Ohio River system, but the lower Mississippi River still, it's dropped back down to critical levels. We're seeing barge freight and restriction go up and restrictions applied as those levels drop. The biggest difference is we are seeing a bit of an export program start to build there, which is good to see that export demand come in. But that's also, that low Mississippi River is also raising rail car rates in the secondary market up to fairly high levels. And while I think most of the harvests were through on the soybean side of things, we still have quite a bit of corn harvest to go, and that's the big volume crop. And with the large side of the crop, there's a lot of country elevators out there needing to find some space, and their alternative space is, well, let's ship it on through, particularly to the export markets. But if transportation's expensive, that's sure not helping your local basis at your country elevator.
And taking a deeper look into our different commodities, Dan, starting on the domestic side with corn.
The corn balance sheet had a surprise in it, in that it wasn't so much that what happened this year, but it was a carryover from the grain stocks report on September 30th that kind of was baked into the ending stocks from last year. Again, the grain stocks available as estimated as of August 31st of 2024 ended up with about 1.76 billion bushels of corn, down about 2 million from where we've been, and that change again. Now that stocks report had mostly to do with more feed use than had been anticipated. So raised feed use 40 million bushels. So brought that old stocks number into, old crop number into the new crop marketing year that started September 1, and ended up that even though with the yield increasing 0.2 of a bushel, the U.S. Crop size increased a little bit, about 17 million. A marginal change. Still, the drop in those beginning stocks made a difference, and we ended up with, by the time we ran through all the changes, a little bit of an increase in anticipated U.S. corn exports, which was a surprise also. Although the pace had been pretty good, still that we dropped projected ending stocks for this 24-25 marketing year down basically to 2 billion bushel, had been about 2.05, 2.06, and that was enough to drop stocks to use from from 13.75 down to 13.3, and provided support for the market. So along with that, there were just minor change in the grain sorghum supply demand balance sheet, a little bit of a increase in exports, somewhat of a decrease in feed usage for the marketing year this just ended. Brought that, and a little bit of another little bit of an increase in yields forward, and found ourselves at pretty much an unchanged but slightly higher ending stocks grain sorghum. So not a lot happening. Grain sorghum really, really depended on exports, and I would wonder about grain sorghum exports really not responding until we have that crop out of the field, and then major buyers like China in particular sees bargains and goes for it. Guy, what about the international side?
Well, on the international side, corn was probably the most interesting thing. I will say I have changed my sentiment since I was here last month. I am wearing my Chicago Bulls hat today, which that's a bit of a reach for me to go out and have a view on that. Even though it's radio, I am wearing my red Chicago Bulls hat. But just the big news we saw on Wednesday was Mexico came into the market and bought 1.6 million metric tons on a flash sale, which was good. Same day we saw 332,000 tons of sale to unknown destination. More than likely that's probably China. I didn't see a big market pop on that day, but it's just, I think, a good signal we are seeing buyers coming into this market, particularly at these historically low prices. I think we put the bottoms in there. Just looking at the USDA numbers for a bit of review, most of the changes were outside the U.S. From what I'm looking at. Coarse grains production globally was down 2.8 million metric tons to 1,101,000. That's 3 million more than last year. Still a pretty big number, but it was brought down. Non-U.S. coarse grains use was increased 2.8 billion tons. That's 17 million metric tons above last year's number. So we're seeing good demand continue to be in there, particularly from livestock sector and meat demand across the world. A lot of that coarse grains drop was in corn. 1.8 million tons of that was lowered, and that puts us below last year's global 23-24 number. That brings corn stocks down 1.8 million metric tons to 306. That's 6 million below ending stocks from last year. So we're tightening up the balance sheet. We're seeing good demand, and that's sort of lending to my more bullish views out there, along with dry weather we're seeing in a number of key growing areas.
Those key growing areas, USDA made changes in Russia and Ukraine in their corn production numbers, and that reflected on down. And you look at the world less China stocks to use, we were at, 2 marketing years ago, the 22-23, 11.25% down in this last marketing year by 11.13. And this year now, again, supporting the bullish statement you just made, that with the last number, we're down to about 10.7% stocks to use for world minus China. So as long as we have grain in hand that we can get to quick, that just in time supplies, that may not do much to the market. However, when people get panicky, i.e. buyers get panicky and they start to wrestle over available stocks, then you start to see more of a seller's market come into play, and we'll see where it goes.
Dan, Guy, we're cutting to a short break now on Agriculture Today, but when we come back, we'll once again be joined by both of you as we continue our domestic and international grain market conversation. You're tuned back into Agriculture Today, and we continue our conversation on the grain market with K-State grain economist Dan O'Brien and the senior economist at the IGP Institute, Guy Allen. Dan, as we continue talking about these different commodities, wanting to begin this segment on the soybean market for the domestic side.
Yes, and I think, Guy, in the first segment, you may have mentioned how harvest over half done, moving strongly. The dry weather in parts of the Corn Belt to the north or west that we haven't got to yet. If dry weather late season hurt yields, it hasn't showed up a lot yet. On the October 11th report, the USDA did project that soybean yields would be down just a bit, 1/10 of a bushel down to 53.1 bushels per acre nationally. There really weren't any major changes that came out of that grain stocks report, unlike for corn. A few minor changes back and forth for the balance sheet, but in general, ending stocks last year projected to be 342 million bushels. Ending stocks last year. Now the numbers projected for this coming year with the large crop to be harvested, now they're projected to grow to 550 million. So, up over 200 million bushels. Stocks to use last year, 8.3%, and now projected to be 12.53. And so our hope for that situation change probably rests for the producer way south of here in South America. Guy, I'll throw that over to you it's really kind of an international story at the moment.
Yeah, well, not a lot changed in the international situation. Just going back to your harvest comment, beans are sort of being finished up. And with the big carries that we had, and due to the challenges of transportation there for the last 4 to 6 weeks, I think those beans got tucked away pretty good, either by the farmer or by the country elevator. And just looking around the local processor bids, I don't know if they've necessarily got the coverage they'd like to have. But once those beans have got put away, I think they're going to be in pretty tight hands for some time. So it'll be interesting to see what that does for basis. Although a number of processors, I think, will be keen to gobble up some of the beans that are still out there yet to come to town. Looking at the global numbers, not a story of unchanged. Ending stocks up 70,000 tons from last month, still 22.3 million metric tons more than last year's total. So the balance sheet is a little bit looser. China imports unchanged at 109 million metric tons compared to 112 last year. Their crush is up 4 million metric tons, though, from last year at 103. That's unchanged compared to 99 last year. Interesting thing about China is trying to reconcile the differences between what China's customs numbers are and what people are picking up on the shipping stems. Shipping stems showing quite a bit more beans have gone into China last year than what their customs data shows. Production numbers unchanged globally at 169 million metric tons compared to 153 last year. That's unchanged. South American exports forecasts were unchanged. Argentina at 4.5 million, Brazil at 105, Paraguay at 7.3. For that southern Brazil and Paraguay beans, we're still seeing dry weather down there in the south affecting that Parana River, making logistics a bit challenging. The other key thing I think that's important to talk about is Brazil's effectively run out of last year's bean crop. We've seen that market now shift logistically to North America with a North American focus. We're competitive now with Brazil and South America, and it should be a U.S. market at least for the next 4 months. The key will be when does the Brazilian new crop come back on? And as you mentioned earlier, that dry weather we're seeing in South America delay planting a bit, or just how much will get planted. And it's going to be the size of that South American crop 6 months from now that's going to drive those summer prices that we'll be looking at.
If we do see movement here, you might see some anticipatory movement in coming months if they just can't get the crop established. But my own take, Guy, just in watching the markets and when they respond, I think they'll wait till after the first of the year to really have proven to them that any weather issue would come to play. And that comes into play. It kind of makes for a risky roll of the dice for people holding beans unpriced here in the United States. Do they wait for the possibility of a weather-driven rally from way south that would come in and impact grains or not? And really, corn and soybeans are in the same boat there. Again, the supplies we have right in hand, pretty good, but still risk maybe more than normal right now, given their weather conditions or dryness, that their problems as we enter early 2025 could impact things. It puts us in a speculative cash market position, but that's so often what we do.
Well, look, with the farmers having most of their beans put away, it's going to take a significant flat price move to shake any of those loose. And for the country elevator, I think he's got those locked down pretty good, probably got his hedges starting to move those out forward. And it's going to take May forward sort of basis improvement to shake loose any hedge stocks. And as you said, they're going to be watching South America pretty close here for the next 3 or 4 months.
Dan, what are we seeing for wheat?
Not a lot of change in the October 11th supply-demand balance sheet, but a few things to note. Coming out of the September 30th annual small grain summary, that U.S. wheat yields overall dropped a little bit from 52.2 down to 51 bushels per acre, and the size of the crop decreased by about 11 million bushels, still 1.971 billion bushels, and that's higher than 1.65, 1.8 the last 2 years. So that's part of the issue in the wheat market, and that not a lot of other changes. We have seen more imports come in, about 10 million more, and a lot of those, they're probably nowadays, some of that crosses the border from the north, but also some can come from Europe, come at least to the coast. So that's something to watch. Kind of a surprise to me anyway. Out of that last stocks to use report, we did show more wheat feeding, even though prices aren't down to, at least in our neck of the woods, in Garden City, you still have ratios about 115, 120% wheat of corn prices. And normally we have to get lower to see wheat feeding come in, but that's in play. We did see the USDA increase the projected exports of wheat to 800. Well, they've left unchanged the exports for this year, 825 million bushels. And that is a 4-year high, which is, we're glad for the trend upward from previous years. The last two, we were at 762, 707. But in our heyday of market leadership, we'd be at 950 to a million to a billion bushels, I think one time up to about 1.2. So still shows the challenge that the U.S. has in competing in world markets. I do want to talk about on a class by class basis. Here in the hard red winter wheat this year, we produced a crop of 770 million bushels. A year ago, we were 596, so clearly an increase. Ending stocks last year, 134 million bushels for hard red, historic low. This year, we're projected to be 220, which is great, but that's still the second lowest on record. It just shows how bad we were last year. Guy, I want to throw things over to you on the international side for wheat.
Again, it's a story similar to soybeans, mostly unchanged there. But we'll look at production. Production was slightly lower by 2.8 million metric tons to 794. It's still higher than last year and a record crop, but they did shave a bit off of that. When it comes to other countries, Ukraine was mostly unchanged. Russia was a little bit lower on their production number. Argentina crop exports were unchanged. Canadian production unchanged. China estimate unchanged at 140 million metric tons. And Australia unchanged at 32. Ending stocks estimated pretty much the same as last year. So there's still going to be plenty of wheat around there. Stocks to use is slightly lower than last year at 32.1 versus 33.4. So it's tightening up a bit, but nothing too great. If you want a good news story, U.S. exports were forecasted a 4-year high. But for hard red winter wheat, if you're sitting here in Kansas, it's still the second lowest ever. So it's better than last year, but not by much on that. If you're a soft red winter wheat grower, those exports were lower than last year, but their production has dropped on that wheat by class as it's just increasingly difficult for wheat in the eastern corn belt to compete with corn production. So let's just say I'm modestly bullish wheat. It's going to follow corn. Corn's going to be the leader on that, I think.
Talked about the wheat ending stocks to use, world ending stocks to use, world minus China stocks to use, dropping about 1% a year. From 2 years ago, 21%, 20.4 last year. This year projected to be about 18.9. So tightening up. That continues to trend for about the last 10 years. And you and I have talked about this guy with all the pessimism that's out there in the wheat market. Again, hand to mouth, we have enough supplies, but these issues that kind of shake up the Black Sea region. You talked about missiles flying, et cetera. And now we've got another second hot war over in that part of the world. Wheat sets are vulnerable to having to respond to geopolitical risks. And we have moisture projected this weekend to come that could help U.S. hard red winter wheat seeding. So we'll see where all this goes.
Yeah, on that geopolitical note, we saw last week Russia put a minimum price on their export. They're basically nationalizing the wheat with the grain trade over there. They're putting a minimum price on that. I want to say about $250 US dollars a metric ton FOB. That's above where it's currently trading at. They're, increasingly raising that export tax on there's some underlying food security issues on there. And definitely politics is going to be involved in that wheat market in the next marketing year.
Dan, Guy, I appreciate you both taking the time to join us today.
Thank you, Shelby.
That was K-State grain economist Dan O'Brien and the senior economist at the IGP Institute at K-State, Guy Allen. We're cutting to a short break now on Agriculture Today, but we'll be right back. You're tuned in to Agriculture Today, and we conclude our Friday show with a weather update with K-State meteorologist Chip Redmond. Chip, thanks for joining us today.
Yeah, thanks for having me.
Chip, what conditions have we been seeing as it continues to be dry in Kansas?
That's been primarily the prevailing conditions across the state. We had a couple rogue showers last week that were noticeable around Ness County and then another south of I-70 and in Wabunsee County. That was it. And so dry conditions prevail. We had warmer than normal temperatures for the most part. The one difference and deviation from that was with the dry conditions, we had a cold front come through that came through on overnight Tuesday into Wednesday. That brought much cooler temperatures to the start of Wednesday, and that brought a widespread freeze for most of the state. The only exceptions are along Colorado border, and southwest Kansas didn't receive a freeze. And then there's some higher elevations, some of the ridge tops in the Flint Hills as well as out west. We're talking the highest elevations. They stayed warm with temperatures only getting in, just touching the 30s, with a warm air already moving in the upper levels. However, down in the valleys and most places saw a freeze. We saw temperatures get below 32. We average around the middle 20s for a lot of folks. And if you were in the lower valleys, like Kansas River Valley and some of the bigger valley bottoms to the west, we saw temperatures down into the teens even. We measured an 18 south of Ashland and Clark County. So the first real taste with that dry air, we can cool it off really quickly, and so we can be very efficient cooling at night, and that allowed temperatures to fall. But temperatures have already rebounded. The wind, unfortunately, has picked up with a low-pressure system developing to our west and high-pressure off to our east. That's given us strong southerly winds, and unfortunately, that's also led to fire weather concerns with just how dry things have been, combined with the warmer temperatures.
With these dry conditions, have we seen drought expansion?
Yeah, we did see drought expansion this week. In fact, we're just shrinking the little tiny areas of the state that are drought-free, basically in the southwest, and we're down to only 3% of the state not in some category of drought, and 64% of the state are in D1 or worse drought conditions, and we're slowly seeing the extreme drought in the southeast part of the state gradually expand. We're up to about 2% now of the state in extreme drought.
Are we going to see any moisture to change that, Chip?
So with this pattern change, we've got a pretty strong storm system that's going to stall out over the Rocky Mountains today, Friday, and into the weekend. And that's going to bring some rounds of showers and storms for far, far western Kansas, where they'll see potentially upwards of an inch and a half of moisture from over the course of the 3 days. That system is going to move east Sunday night through Monday and should bring a band of showers and storms across the state. And it's going to be hit and miss with storms. Everyone's got a chance for the most part statewide. But I think the overall heaviest amounts are going to be around 1/10 of an inch. Some localized higher amounts, but I just don't see a ton of moisture with the system by the time it finally moves eastward. And then things dry out once again, and we get quiet going into end of next week, and maybe the potential the following weekend for another storm system. So if we don't get moisture this weekend into early next week, it's going to be another 7 days probably till we have a chance again.
Back to cooler temperatures that we've seen?
Despite cold front Monday, it's persistently above normal temperature-wise. We're seeing temperatures up into the 80s again. And for the afternoon and at night, we're barely getting it out of the 50s down in the upper 40s. And so that's almost 10 degrees above normal, even 15 degrees above normal for the time of year. Climatologically, we're seeing overall cooler weather. We're above normal temperatures and no longer 100s or 90s. Now we're talking 80s, but that's just going to persist, and I don't really see any significant cold snap in the offing. We will watch the weather pattern as we get into early November. It does look like we're going to see a more significant shift potentially early November. That could bring some cooler air and hopefully some precipitation chances. But that's still weeks off in the offing, and we're watching the West Pacific. There's supposed to be some typhoon activity over the next 7 days that could provide that change. So we have a lot of things that have to fall into place. Until then, we just expect warmer than normal temperatures, drier than normal conditions as we fall into this weak La Nina, and we take it, unfortunately, in the winter months. This is what we would expect.
That was K-State meteorologist Chip Redmond. That's all we have for you this week on Agriculture Today, but we'll be back with more for you on Monday.